Hello, everyone. I'm Matt Clark, research analyst for Money Markets, here with your weekly Bull and the Bear podcast. If you have not already, do make sure you subscribe to our YouTube channel. You're going to find a lot of great features on there with chief investment strategist Adam O'Dell, Green Zone Fortunes co-editor Charles Sizemore, and myself each and every week. Also, check out moneymarkets.com. That is your home for safe, sound, smart, simple, profitable investment information for your portfolio. On the website, you can set up your own watch list of stocks. You can track their Green Zone ratings performance, and you can do all that for free. Also, don't forget about our premium investment service, which is Green Zone Fortunes. Adam, Charles, myself, and our entire team, we all work very hard to give you a ton of analysis, insight, and that one stock every month that we feel is going to perform the market and beat the market by 2 to 3 times each and over the course of a 12-month period. So we'll put a link up top here. You can find out more about Green Zone Fortunes. Now on with today's podcast, I'm going to talk about diving deeper into a profit trend in renewable energy. Now, last year was a banner year for renewable energy. In the U.S., power plant operators added nearly 28,000 megawatts of new generating capacity to the power grid. That's a 12% increase over 2020. And that generates enough electricity to power about 4.5 million homes, depending on where you're at. Now, dig a little deeper, and we can see that wind and solar power accounted for almost 80% of that increased capacity. Natural gas capacity made up nearly a quarter of capacity additions in 2020, but was less than a fifth in 2021. The Electric Reliability Council of Texas Incorporated added a total of 8,139 megawatts of new capacity following the major power blackouts from back in February of 2021 after a severe winter storm caused those blackouts across the state. And of that new generation, just in Texas alone, more than 80% was wind and solar. 42% from wind, 40% from solar. On the other side of the coin, new natural gas capacity fell 20% after it made up only about a quarter of capacity in 2020. Now, this signals a broader shift in how we generate electricity in the U.S., and this transformation is going to expand even more in years to come. To put it in perspective, let me share with you a recent news item I found. This month, February, developers are set to start construction on the largest offshore wind farm in the United States. Danish energy giant Ørsted and Boston-based Eversource are working together to build the $2 billion, 132-megawatt South Fork wind farm, which is going to be located off the coast of Long Island in New York. Once complete, these 12 wind turbines will produce enough to supply power to around 70,000 homes. That's pretty impressive. It may not seem like a lot. South Fork's going to produce about 0.01% of all the capacity in the U.S., but we are in the early stages of a mega trend that's going to transform the energy industry. And keep in mind that South Fork is only the third wind farm in the U.S. Most wind power is actually generated by much smaller onshore wind turbines. Wind turbines offshore have longer blades, they're wider, and they can produce more power on a rotation, whereas the ones you see on land as you're driving through Kansas, Oklahoma, Texas, even into Nevada, places like that, the wind turbines are smaller, so they have to spin more to produce the same amount of power that an offshore wind turbine would produce. Now, globally, the U.S. actually lags its European neighbors in the adoption of wind power, but forecasts suggest that wind power is going to explode in the coming years. We'll see a slight drop in the global wind market this year, but by 2025, global capacity is projected to reach 112,224 megawatts. That's a 38.4% increase from 2022 this year to 2025. Even in the U.S., the trend shows a marked increase in the amount of electricity produced by wind power. From 2010 to 2020, the U.S. increased its production of wind-generated electricity by 1,796% to around 337.5 billion kilowatt hours. All signs point that investment in wind power is going to continue to grow, with everything suggesting wind power generation growing not just in the U.S., but globally in the coming years. Smart investors like you want to take advantage of this trend. There are several companies that are heavily invested in wind power. You have traditional power companies like your Duke Energy, your Consolidated Edison. You also have manufacturers of wind turbines and parts and things like that. These are all part of the wind industry, broader wind industry market. So in order to jump into this trend early and capitalize on the strong potential for profit, I'm going to recommend the Global X Wind Energy ETF. It trades on the NASDAQ, and its ticker symbol is WNDY. So Windy, WNDY. This is an exchange-traded fund that invests in a wide array of international wind energy companies, from production to maintenance and integration. One of its holdings is actually Ørsted, which is the Danish company collaborating on the Long Island offshore wind farm I mentioned just a few minutes ago. Now, Windy had a nice run in the beginning of 2021 into the fall, reaching a 52-week high of about $26.94 in late September. However, pushback against President Joe Biden's Build Back Better bill in Congress, which would have added significant renewable energy infrastructure investment in the U.S., was defeated. Windy actually fell about 22% to its current price. But since the end of January, if you look at that stock chart, you see that at the end of January, we've seen a nice uptick in the stock, where it's seeing some higher highs and, more importantly, higher lows. The stock is starting to make a comeback, and we're seeing a reverse in that negative momentum. Since January 25th, Windy has gained nearly 5% and continues to find strength in the market. So even without the infrastructure spending bill that crippled Congress of late, wind energy production is on the rise. There's no question about that, not just here in the U.S., but also globally. And you can expect to see more projects like the one in New York being proposed soon offshore, whether that be in North Carolina, here in Florida, maybe even in California. And the trend suggests we're turning the corner and increasing our energy power generation to renewables. And Windy, WNDY, is a great way to profit on this trend. So look at it, take a good hard look. WNDY is the ETF to look at for wind power. Now, let's look at the results of our most recent poll question. In last week's question on our YouTube channel, we asked you if you bought either Sony or Microsoft stock after each company announced video game acquisitions. More than half of you, about 52%, said you were holding off buying either stock for the time being. Another 26% of you said you bought Microsoft, while 9% of you said you bought Sony stock. 6% of those surveyed said you actually bought both, while 7% said you wouldn't invest in video game stocks at all. So remember, you can vote in our weekly poll question anytime, and you can do that on our YouTube page. If you go to our YouTube page, you can look under the community tab, and that is where you'll find our weekly poll. Now, if you do have a question on a stock or maybe a particular sector that you'd like Adam, Charles, or myself to take a look at, email us. That email address is feedback@moneyandmarkets.com. Feedback@moneyandmarkets.com. We'll post that here. You can post down below this video on our YouTube channel as well. We love to see any feedback that we get. So if we do use your question, if you ask it and we use it in an upcoming video, we're going to send you some very cool Money and Markets gear. This could be ranging from t-shirts to hats to sweatshirts to all sorts of good stuff. We have even more stuff coming as well. So ask your question and we use it, and you will get some of that free gear. Again, it's feedback@moneyandmarkets.com, or you can comment down below on our YouTube channel. Also, head over to moneymarkets.com, sign up for our free daily e-letter. In that, we give you safe, sound, smart, simple, profitable investment information for your portfolio delivered to your inbox for free 7 days a week. And while you're at moneymarkets.com, check out our proprietary green zone rating system. You can use our metrics and get ratings of thousands of stocks traded on the market. Go to the website, type in your stock in the search bar that's located in the top right side of the bar of the homepage, and it will you'll be able to see our rating for the stock, its breakdown of the metrics we use to rank the stock, fundamental data, a stock chart. You can even add stocks to your own personal hot list, and you can do all that at moneyandmarkets.com, and you can do it for free. That's all for me this week. Until next time, this is Money and Markets research analyst and host of the Bull and the Bear podcast, Matt Clark, wishing everyone safe trading.